Good morning. Yesterday we have someone asked a great question about what's the difference and how to prepare this loan application differently for different type of security, such as off the plan, house and land, construction versus secondhand. Of course, at the end, I also add commercial properties. So mainly around the timeline of the security. So I'm trying to flip next page. Disclaimer, of course, this is not your personal advice. Me, some awards, did some small project, big projects, right? So that's me, right? So answer the question of the plan, house and land package, construction versus secondhand and commercial. What's the difference? Well, first of all, I won't reinvent the wheel. If you are a mortgage broker or lending manager, of course, in bank, once you get a portal, you can actually look up. So once we think of the question, always think about which category it belongs to. So this category belongs to how do we verify the security, or what kind of documents do we need to obtain. So I'll take one of the big four as an example. As you can see, National Bank broker portal, number 5, you can see construction loan. Understand the requirements and detail of the construction. So I won't read through it today, but I will explain and highlight some of the main concepts. All right, so the reason you're here today is because maybe you didn't know where to look for it before, or are you afraid of making mistakes, or doesn't know how to interpret the policy. So again, on the right-hand side, you can see it's quite detailed, breaking down into 5.1 to 5.8. All right, so on the left, today's main concept will be around the definition, main documents require, timeline and checkpoints I will recommend. And in that process, I will also introduce how that may affect your valuation results and highlight some of the common mistakes. So first of all, of course, what's off the plan and how do we do the mortgage for it? Well, simply, as you can see the image, off the plan is you buying a status and then the land is vacant. So you're buying the future buildings on top of it. And yes, you can save stamp duty. It's calculated on the day you sign the documents, usually, and might be different in different states. So the definition for off the plan for me, by my definition, is newly built. And they are usually multiple units, like apartments, or even a house and land. They may subdivide many lands around the same area. The key around the off the plan that's going to affect your loan application is that, number one, the settlement date is not yet confirmed. It's definitely more than 90 days, usually a year or 2 or even 3. Or your clients probably purchased it halfway through, halfway through construction, or maybe just before the completion, they purchased it from somewhere else. All right. In Victoria, we ask for an extra form called nomination form to change ownership. In different states, they're different. Some of the states will require you, such as Queensland, require you to re-sign the contract with the vendor. Okay, so the key is that your client doesn't own the land, so they have to be ready, right, for the settlement in advance. All right, and later on I'll talk about how to avoid those mistakes. Well, of course, for apartments, it also categorized into high density by postcode and by the numbers of units. So each banks are different. We need to check in different time. And high density usually have low valuation. Is that true or not? Well, not necessary, and you can always have the ways to go around it. Okay, of course, they are off the plan townhouse and house and land, and not necessarily all the land are coming with package from a builder. All right, so it depends on how they're marketing that. All right, off the plans, there are different prospects. Okay, what kind of extra documents? So again, you can find extra documents by different banks, as I highlight here. The most missing one, of course, look for the right people to ask for the right documents. Like, for example, in off the plan, if it's a large project, except the agents, right, you have also another agent called settlement agent. They are more like the solicitors or conveyancing service. Okay, so the settlement agent will have more documents, more comprehensive documents, and also if it's house and land, you also need to ask for the builder for the insurance and building permits in order to start the progress draw, which I will introduce a bit later. The common mistake, of course, they only ask for the contract of sales and the 10% deposit receipt. And some of the builders itself got problems. Some of the builders, their progress payment is actually not compliant. They're asking for too much money at the very beginning. All right. This mistake, please avoid to make it, is that missing the specifications. If you didn't ask for these documents and then the valuer is too busy, so they probably just didn't bothering to ask you again. So you end up have lower valuation. So that's not good for the valuation and results, isn't it? Okay. So let's take house and land as example. All right. Vivian asked the question. Some is not necessarily house and land. Some is turnkey solution. That's exactly right. Turnkey solution is not house and land. All right. You get a house when it's complete. Okay. But the building and construction progress is the same. So as you can see, different type of houses on the right hand side, you can see that stage 1, stage 2, stage 3, 4, 5. Okay, you're gonna memorize this by heart. All right, clear the sides, slab the base, frame, fit out, and then lock up and completion. Okay, if it's a big apartments, then if the agents tell you, oh, it's at lock up stage, then you probably need to do the finance as soon as possible, because it's going to take maybe another 3 to 6 months or within that time frame to reach the completion stage. If it's turnkey or townhouse, it's the same. All right. So, but if it's house and land, you do it from the very beginning. You do it when the land settle. Okay. And here's the demonstration for the progress payment. All right. Valuation for house and land is as if complete. Okay. So based on the land value today, and then your contract price based on the contract you provided. So which, again, including the specifications. Okay. And different from apartments and turnkey and townhouses. And so you can see the progress payment and a different stage of progress. So very clear picture. And then your progress, during your progress payment, is actually interest only repayment. Okay. All the way until it's complete, it turns into principal and interest. Okay. When if your initial option is principal plus interest. And this is a demonstration of how the interest is built up, from 900-ish to 2,500-ish when it's complete. All right, so a lot of mature family will come to you. They already have the house or they already have the land. They want to demolish the house and then they want to build a very, very nice house on it, but it's not through a volume buildup. Okay, so then this will require more time, more understanding of the project. Again, if you will go through demolition, the valuer only value it on the land value base plus new contract price. So it's not much difference from the house and land package, except that you probably don't have much time pressure to settle the land. All right, if it is a very high dollar value, like above 2 or 3 or 4 million, then different banks may consider it as a luxury. Then the LVR could drop, all right? And then for the progress pay, the banks may pay you less for the land and then more for the construction because they want to have more control of the funds, okay? So, and giving you a tips, okay? There is one bank, do your research, can actually give you progress payment interest only, and then during the progress payment period, they can still fix the interest for you at a lower rate. Okay, so whoever can give the answer next time will have some award. All right, owner builder, again, how to get a loan. You still can, but just lower LVR, more paperwork. And again, cost plus not widely acceptable. Refinance opportunity, if the clients already own the land, then perhaps they have soft equity, they can top up. Okay. All right, so construction before and after, if you want to build just one unit, okay. But if you want to build multiple units, different banks' policy are different. It could be 2 or 3 or 4, up to 4. If more than say 4, then the banks will require qualified pre-sale. Okay, so that is more commercial loan. Or if it's less than the numbers the banks restricted, then some of the extra documents as listed in point 4 is the planning permit, working drawing, proposed rental income, because you are going to build and hold. Okay, and also third-party reports such as commercial valuation, QS, quantitative survey, and some of the reports, traffic reports, environmental reports, all right, all that. All right, so again, back to off the plan and secondhand. So off the plan can also including house and land, turnkey, apartments, construction, and all that. So what's the difference in 3 different perspectives? We really need to check the timeline and the checkpoint. So in terms of a loan application, off the plan and established properties is different from by the valuation. For example, with a secondhand property, you can do the valuation anytime after you sign the contract. All right, but with off the plan, you have to do it unless it's house and land. You can do it before the land, just before the land is settled, and then you look at the construction just by its contract. But if it's turnkey solutions such as apartments, townhouse, or some of the houses, then you can only do it just before the completion. All right, we have to track by third-party email evidence. What do I mean by that? Because sometimes I understand that the agents or settlement agent or even conveyancer, they're too busy, and then they're probably telling you the house is going to settle in, or the apartment is going to settle in maybe around 2 months. And after 2 weeks, they say, oh, sorry, got an occupation permit. I was going to settle in 14 days, right? So don't just let them telling you over the phone or verbally, but get them to write an email to you, all right, in writing. All right, so that you can avoid the responsibility. We need to get very specific instruction in terms of the timeline for the off the plan, right? So settlement booking, again, is a little bit of hassle here. Established property, all good days, you don't need to worry about too much. You're probably doing this every day. But off the plan, sometime when it's complete, the loan is approved, but then it's been dragging very long. It's past 3 months. You're gonna renew the loan and then get the new documents from the clients again. So when it can settle, it's gonna settle when you get a council's occupation permit. And once you get the permit, within 14 days, they can call for settlement. Of course, some of the extra documents such as body cop, which include insurance, and settlement agents company can definitely provide you that. All right. So if you want to check the timeline, it's definitely my suggestion is to get the loan started at least 3 months before the indication settlement time. Now the last category of the loan application, since we talked about all this. So how do we get commercial loan prepared? All right, it is a very complicated question, but I'll touch point that, as you can see from the left to right, there are 3 foremost stages. So number 1, you're probably doing a lot of small things at once. That's the busiest stage. You engage with the right valuer, with the right postcode, area, and then type of the property, such as because commercial value are very specialized. They're not like residential. Probably one residential company can do everything in the same state. But for commercial, it's a very small market, right? Childcare, they have childcare specialists, aged care specialists, townhouse development specialists. Okay, so it's different niche market. You need to ensure you're speaking with at least 2 or 3 specialized valuer, and then selecting one, okay, of them. And the appetite check. So checking with the bank that for the terms and conditions you're looking for. For example, you're looking for more than 50% LVR or 60% LVR. You're looking for the ICR ratio less than 1.2, and what kind of interest rate is acceptable by your clients. Okay, and if they can accept a tenant with 11 months remaining term for the first term or last term or not. Okay, this is sort of the term and condition you need to pre-check before the clients formally get approved. What do I mean by that? Because if you move into the middle, valuation and deal itself, such as client's own background, income, experience, because commercial loan is very interesting. It's not the same from residential. Residential loan, you can get approved by your income, your credit history, and all that, and you get approved subject to valuation. All right, but then commercial loan, yes, they also approve subject to valuation, but then it's largely dependable on the valuation reports, not just the value of the result, but also the comments around the property itself, such as vacancy risk, tenancy risk, potential development risk, market risk, profit on cost, and all that will affect the result of the loan. Say you get approved for the commercial loan, and then for some reason the valuation report is not so positive, and then it's going to increase the rate of your commercial loan or lower the loan amount. All right, so this may happen. All right. Okay, so if you love the sharing today, you can welcome to join me to participate in the charity, and I'll stop sharing here so you can ask questions. 同学们好。